Hello dear traders and welcome to our channel. We present to you our latest review of the crypto market. Binance, the world's largest crypto exchange by trading volume, kept collateral for some of the crypto assets it issues in the same wallet that also holds customer assets, Bloomberg recently reported. We will return to the news right after we look at the situation on the price charts of the main digital assets. At the beginning of the trading week, we saw a return of optimism in the equity markets. On January 23rd, the NASDAQ index gained 2% as the share price of Apple, Tesla, Spotify and some other companies skyrocketed. Given that US inflation is slowing down and the American economy is far from a hard landing, investors are now increasingly anticipating less hawkish steps from the Federal Reserve. In this light, the US dollar index bottomed at 101.6 against the basket of 6 major currencies on Monday. At the same time, the NASDAQ index traded at a weekly high, and Bitcoin broke through resistance at $23,000. Notably, the coin has broken through the barrier thrice since August 22, but has failed to hit a new yearly high. The thing is that the bull run somewhat slowed after Microsoft, Tesla, semiconductor manufacturer Texas Instruments, and other big US corporations posted disappointing earnings results. On Wednesday, Bitcoin dropped to $23,388. In a week, the price went up from $20,670 low on January 19th to a high of $23,717 on January 21st. By the end of Wednesday, Bitcoin was consolidating around the $23,000 barrier. It remains to be seen whether the bulls will be able to retest the next resistance range seen at $25,000–$28,000. Although they are determined to reach the target, the bear trend seems more likely in the short term. In such a case, Bitcoin could fall to spot at 22,500. An increase in bearish pressure may push Bitcoin to $21,489. Bitcoin miners are now liquidating their reserves at a record pace. In the recent price increase, they have found a great opportunity to sell their coins partially or altogether. Last week, miners saw Bitcoin profits decline steeply. They need to ask for large loans to buy expensive mining equipment, only fan the flames. Some of them had to partially sell equipment or request bigger loans, while others gave up and went bankrupt. Thus, Core Scientific, one of the largest publicly traded crypto mining companies, had to file for bankruptcy due to having $1.8 billion in liabilities. Therefore, a 30% surge per decade in Bitcoin 2023 was perceived by many simply as a sign of faith. So they took a chance. If digital gold extends the bull's run, it may trigger a rally on Ethereum. Ether may reach the bullish target and psychological level of $2,000 due to its high correlation with the flagship cryptocurrency. Although Bitcoin has been moving in the green zone since the start of the year, Ether's price chart of the past week illustrates a series of steep and bumpy ups and downs. The price rose from 1,511 low on January 19th to the 1,663 high on January 21st. By Wednesday, the quote tumbled to 1,526, but then partially offset losses and approached the 1,617 mark. A drop in Ethereum came due to a sharp increase in profit taken on January 20th. Traders were massively selling the altcoin and locking in profits, which pushed the price down even despite deflation caused by decreased demand. Now the altcoin is gripped by fear, uncertainty and doubt. over 20% of all discussions on social media have been about Ethereum in recent days. On the other hand, experts believe that the hype around the coin could be beneficial in the medium term. The lawyers of Genesis, the now bankrupt crypto exchange, are optimistic about a quick resolution of its disputes with creditors. On January 20th, the firm announces it filed for bankruptcy, which allows Genesis to seek reorganization of its debts. The company owes creditors more than $3 billion. Genesis was hit hard by the collapse of crypto exchange FTX and had to file for Chapter 11 bankruptcy. The company will initiate a marketing and sale process to raise capital to pay creditors fairly and equitably. Genesis now has more than $150 million on hand to support its ongoing business operations and facilitate the restructuring process. And now let's get back to the Binance situation. The company said it would mistakenly mix the collateral assets for some of the tokens it issues with the funds of its customers. Binance has recently released a proof of collateral for its 94B tokens that are stored in a single wallet. However, a Bloomberg report revealed that the wallet holds significantly more tokens in reserve than required for the amount of B tokens that Binance had issued. That allegedly suggests that the crypto exchange kept collateral with clients' coins rather than storing them separately. Binance reportedly admitted the error. Binance is aware of this mistake and is in the process of transferring these assets to dedicated collateral wallets, a spokesperson for the crypto exchange said. When clients' assets are mixed with the company's assets and are used for trading, that may result in a lack of liquidity on the exchange. In other words, individuals will simply be unable to withdraw their money. This is exactly what led to the FTX collapse in 2022. Unfortunately, a series of crypto catastrophes and almost 14 months of bear market have had a tremendous impact on digital money. Now the crypto market is trying to restore its equilibrium, something between last year's dead zone and 2021's euphoria. Our weekly review of the crypto market here comes to an end. Stay posted and stay tuned. We will see you in a week. Take care.